Before we dive into how AI is revolutionizing personal investing, a very important note: this video is for educational purposes only and does not constitute financial advice. Investing inherently involves risk, and you should always conduct your own thorough research or consult a licensed financial professional before making any investment decisions. With that out of the way, let's explore a powerful shift quietly happening in the world of money management. Artificial intelligence, or AI, is no longer just for tech giants or sci-fi movies. It's transforming how everyday people can approach their investments. Just a few years ago, sophisticated analytical tools, the kind used by massive hedge funds and professional financial analysts, were locked behind expensive data terminals and institutional subscriptions. Access to that level of market insight was a privilege, not a widespread opportunity. But today, much of that same analytical power, once reserved for the elite, is increasingly available to anyone with a basic laptop and an internet connection. This video will break down exactly how AI is being used to invest smarter, and crucially, how you can start using these powerful tools yourself, even without a formal finance degree. So, when we talk about AI in investing, what exactly do we mean? In simple terms, AI refers to computer systems designed to perform tasks that typically require human intelligence. For investors, this means AI can process vast amounts of data, identify patterns, and even make predictions based on that information. Think of AI as an incredibly fast and tireless research assistant who can sift through more financial data in a minute than a human could in a lifetime. It's about augmenting your intelligence, not replacing it, by providing better, faster information to inform your decisions. Let's begin with the most fundamental use case: research and analysis. Before AI tools became widely accessible, researching a potential stock investment was a monumental task. It meant manually reading through lengthy company earnings reports, which are detailed financial statements released quarterly. You'd also pore over countless news articles, try to understand complex analyst opinions, and cross-reference various financial metrics, like a company's revenue or profit. This meticulous, often tedious process could easily consume hours, or even days, for just a single company, often leaving you feeling overwhelmed by the sheer volume of information. Now, imagine that same process, but supercharged. AI tools can instantly summarize earnings calls, which are audio recordings of company executives discussing their financial results. It can highlight key financial metrics, such as a company's gross profit, net income, or cash flow, making these crucial numbers easy to spot. Even more impressively, AI can proactively flag red flags, potential risks or inconsistencies hidden deep within a company's financial filings, something a human might easily overlook. This doesn't remove the need for your understanding, but it dramatically cuts down the time required to get a clear, concise picture of a company, helping you decide whether it's worth deeper investigation. Let's take a concrete example. Say you're researching a tech giant like Google or Apple. Their quarterly earnings calls and reports are dense with information. Instead of listening to a 2-hour call or reading a 100-page document, an AI tool can provide you with bullet points summarizing the most important announcements: revenue growth, new product launches, challenges in specific markets, and future outlook. It will instantly tell you if revenue met expectations, if profit margins improved, or if there were any surprising shifts in their business strategy, saving you immense time and helping you focus on the truly critical details. Our second powerful use case is sentiment and trend analysis. While financial reports give you the numbers, sentiment analysis tries to capture the mood of the market. AI tools can scan an enormous volume of news articles, social media posts, and market commentary, far more than any human could ever hope to read, and analyze the overall sentiment. Is the chatter around a company positive, negative, or neutral? Are investors feeling optimistic or fearful about a particular industry or the broader economy? This gives you a unique, real-time pulse of public perception, which often drives short-term market movements. Understanding market sentiment is particularly useful during fast-moving events, like earnings season when many companies report their results, or during major global news events. Prices can swing wildly based not just on a company's fundamental performance, but on how the public and other investors are reacting to that news. AI helps you identify these trends, sustained movements in sentiment. For instance, if a company releases good earnings, but social media sentiment is overwhelmingly negative due to a past controversy, AI can highlight this divergence, giving you a fuller picture than numbers alone. This real-time understanding of sentiment and trends is invaluable. It helps you grasp the gap between what a company's fundamentals, its core financial health, suggest, and how the market is actually reacting emotionally or speculatively. This gap can present opportunities or warn of impending volatility. For example, if AI detects a sudden surge in positive chatter around a less-known stock, it might be an early indicator of growing interest before professional analysts pick up on it. Conversely, a sudden dip in sentiment, despite solid financials, could signal a temporary buying opportunity or a need for caution. AI helps you build this skill of reading the market faster. Our third key use case is portfolio analysis and rebalancing. Many people, especially beginners, make a common mistake. They build an investment portfolio once, perhaps with a set of stocks and funds, and then rarely revisit it. But your financial goals, your risk tolerance, how much risk you're comfortable taking, and the market itself are constantly changing. A portfolio that was perfect for you 5 years ago might be completely out of alignment with your current situation, leaving you overexposed to certain risks or missing out on new opportunities. This set-it-and-forget-it approach can be costly in the long run. This is where AI-powered portfolio tools become incredibly valuable. These tools can continuously analyze your current holdings, giving you an up-to-the-minute overview of your investments. They can flag when you're overexposed to a particular sector, meaning too much of your money is tied up in one area, increasing your risk. For instance, if all your investments are in tech stocks, AI will point out that you might be vulnerable if the tech sector takes a hit. Critically, AI can suggest rebalancing strategies based on your stated financial goals, whether it's saving for retirement, a down payment, or a child's education. This used to be a premium service, typically reserved for clients of expensive financial advisors. Now, it's often something you can check on your own, on demand, for free or at a low cost. Let's illustrate with an example. You initially built a portfolio aiming for 60% stocks and 40% bonds. Over time, due to a bull market, your stocks performed exceptionally well, and now your portfolio is 80% stocks and 20% bonds. This means you're taking on significantly more risk than you originally intended. An AI tool would immediately detect this imbalance. It would then suggest specific actions. For example, selling a portion of your stock holdings and using that money to buy more bonds, bringing your portfolio back to your desired 60-40th target. This keeps your portfolio aligned with your risk tolerance and long-term goals without requiring constant manual oversight. The fourth use case, scenario modeling, is where AI truly performs a task that would take a human analyst an incredible amount of time and computational power. This involves running multiple what-if scenarios against your portfolio or a specific investment. Imagine asking, what happens to my portfolio if interest rates unexpectedly rise by 2% next year? Or, what if this particular sector, like renewable energy, underperforms for the next 2 years? AI tools can quickly simulate these complex situations, instantly showing you the potential impact on your investments. This advanced capability was once exclusive to large institutions with supercomputers. By modeling these various scenarios, AI provides you with a much clearer sense of potential downside risk, meaning how much you could potentially lose, before you commit your hard-earned money, not after a negative event occurs. This proactive approach helps you stress test your investment decisions. It's like having a financial simulator at your fingertips, allowing you to anticipate challenges and prepare for them. This capability helps you make more resilient investment choices, understanding the possible range of outcomes rather than just hoping for the best. It's about being prepared for different market environments. The fifth use case, and one of the most practical for beginners, is AI-powered education. Let's be honest, the world of finance is full of confusing jargon. If you've ever felt intimidated by terms like P/E ratio, amortization, or diversification, you're not alone. The financial industry often uses complex language that can make people shy away from investing altogether. But what if you could have an expert patiently explain any financial concept, term, or strategy to you, in plain language, tailored exactly to your level of understanding, instantly? That's exactly what AI tools can do. You can ask an AI, explain what a PE ratio is as if I'm a teenager, or break down the concept of compound interest in a simple analogy. The AI will respond with clear, concise explanations, often using analogies that make complex ideas understandable. This removes one of the biggest barriers to entry for new investors, the intimidation factor of financial jargon. It empowers you to learn at your own pace, clarify doubts instantly, and build a solid foundation of financial knowledge without needing expensive courses or textbooks. AI can be your personal finance professor, always ready to teach. Now, it's crucial that we address the limitations. AI is incredibly powerful, but it is not a crystal ball. It cannot predict market crashes with certainty, it cannot guarantee returns, and it is only as good as the data it's trained on and the assumptions built into its algorithms. Anyone promising an AI system that guarantees consistent profits or infallible market predictions is either misunderstanding how these tools truly work, or is deliberately trying to mislead you. Be extremely skeptical of such claims. AI assists, it doesn't perform miracles. The realistic and most beneficial use case for AI in investing is not about replacing your human judgment or critical thinking. Instead, it's about amplifying it. AI gives you access to vastly superior information, organized and analyzed much faster than ever before. This means your own judgment, your understanding of risk, and your long-term goals have more, and better, data to work with. Think of AI as an incredibly sophisticated calculator, a powerful research engine, and a tireless analyst all rolled into one. It enhances your abilities, making you a smarter, more informed investor, not a passive spectator. So, how do you actually start using AI to invest smarter today? Here are 3 practical steps. First, use AI tools to significantly speed up your research process, but never allow them to replace your judgment entirely. Let AI summarize reports, organize complex information, and highlight key data points or potential red flags. But always make the final investment decision based on your own thorough understanding, your personal financial situation, and your own risk tolerance. AI is there to serve you, not dictate to you. It's a tool, not a guru. Second, use AI as your personal devil's advocate to check your own blind spots. We all have biases, and it's easy to overlook risks when we're excited about a potential investment. Ask an AI tool to challenge your investment thesis, that's your underlying reason for believing an investment will succeed. Prompt it to point out risks you might be overlooking, or to argue against a decision you're about to make. This is one of the most underused, yet powerful, applications of these tools. It forces you to think more critically and consider alternative perspectives, strengthening your overall decision-making process. Third, treat AI as an ongoing, continuous tool, not a one-time lookup. Investing is an ongoing journey, not a destination. Establish a regular habit, perhaps weekly or monthly, of using AI to review your portfolio. Check for changes in the companies you're invested in, and stay updated on the broader market conditions without needing to spend hours doing manual research. This consistent engagement ensures your portfolio remains aligned with your goals and helps you react proactively to new information. AI can keep you informed and agile, transforming your investment approach from sporadic checks to consistent, informed oversight. The bigger picture here is that AI is fundamentally lowering the barrier between casual, individual investors and the kind of in-depth analysis and sophisticated tools that used to be exclusively reserved for Wall Street professionals. This doesn't mean that everyone who uses these tools will automatically become a great investor. Financial success still hinges on discipline, patience, and sound judgment. These qualities will always be essential. However, it does mean that the tools themselves are no longer the limiting factor. The playing field is leveling, giving more people the chance to make truly informed decisions. If you're truly serious about improving how you invest and making more intelligent decisions, your focus shouldn't be on finding an AI tool that promises to do all the thinking for you. That's a dangerous path. Instead, look for AI tools that help you think more clearly, more quickly, and with significantly better information than you had access to before. That, my friends, is the real advantage of integrating AI into your investment strategy. It's an empowering transformation, and it's an advantage that is genuinely available to you starting today, giving you more confidence in your financial journey. Once again, please remember, this video is intended for informational and educational purposes only and is not financial advice. All investments carry risk, and past performance is not indicative of future results. Before making any investment decisions, always conduct your own thorough research, understand the risks involved, and consider consulting with a qualified and licensed financial professional. Your financial future is important, and informed decisions are always the best decisions. Thank you for watching, and good luck on your investing journey.